Hey everyone, and welcome back for another deep dive. You know how it is, right after the holidays. The credit card statements start rolling in, and suddenly you're wondering where all your money went.
Oh, yeah, definitely.
Well, today we're going to try to answer that question, well, at least when it comes to America's spending habits. We're diving into the world of U.S. trade and trying to figure out why the gap between what America buys and what it sells just got a whole lot bigger.
It's true. The latest numbers are in, and they're a little eyebrow raising.
So let's get right into it. We've got a fresh article from Reuters titled, U.S. Goods Trade Gap Widens in November. And spoiler alert, that gap widened way more than anyone was expecting.
Yeah, you could say that again. The goods trade deficit jumped to $102.9 billion in November, up from $98.3 billion the month before.
Okay, so right off the bat, that's a pretty significant jump.
Right.
I mean, weren't economists predicting the opposite, like things were going to kind of level out?
Exactly. They were actually expecting the deficit to shrink a bit, maybe to around $100.65 billion or so. Easing supply chain pressures, a slight dip in consumer demand, things like that. So to see it widen this much, yeah, it's definitely a curveball.
A curveball indeed. So let's break this down for the folks at home who don't live and breathe economic data. What exactly does a widening trade deficit mean, like in real-world terms?
Well, put simply, it means we're buying more stuff from other countries than we're selling to them.
Okay, so more imports than exports. Got it.
Right. Now, a trade deficit isn't always a bad thing. Sometimes it can actually be a sign of a strong economy. Consumers have money in their pockets, they're spending it on goods, even if those goods are coming from overseas.
Right.
But when that deficit keeps growing like it is now, that's when we start to see potential problems.
Problems how so? I mean, I always thought a bustling marketplace, even if it's mostly imports, is a good sign that the economy is doing well.
Well, here's the thing. When we import way more than we export, more money is leaving the U.S. economy than coming in. And that can slow down growth because it means less money is available for investment and spending here at home. It also makes us more reliant on other countries for the things we need, which can be a bit risky if things get shaky in the global economy.
Makes sense. So back in October, when the trade deficit shrunk, everyone was kind of celebrating, right? Because it meant that trade was actually helping the economy grow.
Precisely. And that was a big deal because trade hadn't contributed positively to GDP growth since the last quarter of 2022.
Right. So this November data is kind of throwing a wrench in things now, huh?
It is. It's raising concerns that trade might actually drag down economic growth instead of giving it a boost.
Okay. So it sounds like we've got this widening trade gap, potentially some economic jitters. But wait, there's another piece to this puzzle, right? Something about businesses and potential changes in trade policy.
Ah, yes. You're talking about the Trump factor. Businesses are definitely keeping a close eye on what President-elect Donald Trump might do on the trade front.
Right. There's that talk about tariffs and stuff.
Exactly. There's concern that he might slap tariffs on certain imports, which would make those goods more expensive.
So basically, businesses are thinking, hey, let's stock up now before prices go up.
Right.
It's a smart move for them, but what does that kind of buying frenzy do to the trade deficit?
It probably makes it worse, to be honest. This rush to import goods before any potential tariffs take effect is likely contributing to the widening we're seeing. Companies want to lock in those lower prices, which inflates import numbers in the short term.
Ah, so it's like a self-fulfilling prophecy almost.
Kind of, yeah. It's a complex situation with a lot of moving parts.
Definitely. So to recap, we've got this expanding trade gap potentially driven by businesses reacting to future policy changes. And all of this could have a real impact on economic growth. Is that the bottom line here?
It's a big part of the story, but it's not the whole story. Remember, this data is only looking at goods. We need the full picture, including services, imports, and exports, before we can make any definitive conclusions.
Gotcha. So there's more to come.
Exactly. We should get that data early in January, so stay tuned.
Will do. But in the meantime, this brings up an interesting question for our listeners out there. How might these shifts in the trade deficit affect you personally? Think about it. Could it impact the prices you pay at the store, the availability of certain products, maybe even job opportunities in certain sectors?
It's definitely something to consider. Global trade, it touches so many aspects of our lives. It influences prices, jobs, the variety of products we have access to. It's all connected.
Absolutely. So while we wait for the next round of trade data, it's worth taking a moment to reflect on how these global shifts play out in your own life. And hey, if you're really into keeping tabs on the economy, the Atlanta Fed's GDP Now tracker is a great resource to check out. As of today, it's forecasting fourth quarter economic growth to match the third quarter's rate of 3.1%.
Yeah, that's definitely one to watch.
For sure. All right, folks, that's going to do it for this deep dive into the world of U.S. trade. As always, thanks for tuning in, and we'll catch you next time.
See you now.